Hello and welcome. This is BQ Prime. I am Agam Vakil. You're watching the F&O show. In this show, we take you through all that is happening in the markets and specifically derivatives, equity derivatives, with futures and options, and what the trends are telling us. What are the underlying factors, technical perhaps also, as well as the many other features of the futures and options space, giving you an idea in terms of trends. And for now, let's start by taking a look at the markets. We're looking at marginal green for now for both the indices, the Bank Nifty as well as the Nifty. We really haven't seen too much change. Of course, yesterday was a day where we did see quite a bit of weakness, especially if you consider that we started off the day's high, which is higher than the previous day, and then eventually landing up lower than the previous low tick as well. So we're looking at a lot of volatility. That said, the question really is that are we expecting about a short covering? Can we expect consolidation, or are we looking at further weakness at this point in time? For now, there certainly has been a lot of resistance on the higher end, and that's explained by the way the indices behaved in yesterday's day of trade. But you can't ever rule out a short covering, can you? So we're keeping an eye on some of these factors. Very quickly, let me address what's going on in the options market as well. At the moment, as far as the Nifty goes, we are looking at a maximum open interest in the 19,700 call and the 19,600 put. This is the 5th October expiry, mind you. And those are the exact options where we're also looking at a significant addition in open interest in today's day of trade. As far as the Bank Nifty is concerned, again, it's a 500-point range, and we really haven't seen too much, move as far as that range is concerned. 45,000 on the higher end and 44,500 put on the lower end. We've been talking about 44,500 for quite a bit over the last couple of days because of the fact that it's been such an important pivot point over the past 5 months, in fact, because we've actually seen, if you actually draw a line around this of 44,500 level, you realize that it has been intermittent over the last, in fact, since the month of May. But we will talk about a lot of these things. So on that note, let's get in our expert for today. We have Aditya Agarwal. He's the head of research and investments at Invest for Edu. I'm actually speaking to Aditya after a very long time. Aditya, good morning, and thank you so much for joining in. Tell us how you're looking at the markets and also how it's been so far for you.
Good morning, Agam, and good to be back on your show. It's a pleasure, and looking forward to it for more interactions in the near future. Absolutely. Always enjoyed coming on your shows previously as well. Coming back to markets, yes, there is a pickup in volatility. If we take a look at the VIX, the move on the VIX yesterday, it was a sharp 10% up move, 10 to 15% up move that we witnessed in yesterday's session. But having said that, I believe markets are due for a short covering rally, and the entire month of August, in fact September, if we precisely talk about, has witnessed a pickup in volatility and corrective moves we have seen. After Nifty hitting that 20K mark, markets have been corrective, and on the downside, after testing 19,200, at the moment 19,550 to about 19,600 is acting as an immediate support level. So if I ignore yesterday's move, I believe because yesterday was again the monthly expiry session, so there could be a bit of adjustment because of that as well. I believe markets are due for a short covering rally, Agam, and I'll stick my neck out and maybe I'll take a punt in the market, go long at current levels, maybe look at a support of 19,600, where, as you mentioned, is a good build up on the put side. So I believe option data also suggests that there is a good support around 19,600 odd levels. So keeping that as stop loss, I believe one should look at going long on the market again. As you mentioned, there's a pickup in volatility. Markets will remain choppy and volatile. So it's not for faint-hearted people, this market anymore at the moment. If you have that kind of aggression and you are a savvy trader, then I believe the markets do provide an opportunity of fresh long. I'm looking at a target of 19,700, 750 to about 19,800 on the upside. If you take a look at the call side as well, as you mentioned, 19,700 is where we are seeing maximum open interest, but it's not significant as compared to 19,600 put side. So I believe market does provide you a room till 19,800, and there are some pockets which are definitely looking strong. So there is sectoral rotation also which is taking place. I believe all in all, markets don't look all bad to me, with a good strong support at 19,600. Risk to reward is in favor of going long. I would stake my neck out and look at long positions.
Right, fair enough. Aditya, you're also expecting short covering in the Bank Nifty. Interestingly, your support is also where the markets are currently, where that specific index is currently. Can you take us through your view there as well?
Yes, Agam. So actually, I believe there is more room on the upside in the Bank Nifty. Bank Nifty is something which will provide support to the Nifty. IT is clearly witnessing a bit of profit booking in trade today, and it's been all over the place, IT. Though it has outperformed in the previous month, I believe IT will remain choppy and volatile. So banks is one space, I believe, where traders should actively look at, and there could be a good opportunity in the Bank Nifty. Because if you take a look at the way Bank Nifty has moved in the previous expiry, it actually didn't it wasn't that bad as compared to Nifty, to be honest, because it has been underperforming for some time. And one bank, I believe, which traders should keep a close eye on is the HDFC Bank, because after a good correction in the bank, yesterday it stood its ground. It did not witness a big correction, unlike many of the FNO stocks, frontline FNO stocks. I believe HDFC Bank could lend support to the Bank Nifty, and if there is a rally in the HDFC Bank, that could trickle down to rest of the private sector banks as well. PSU banks have been outperforming, so I believe Bank Nifty can test levels of 45,000 on the upside immediately, where again, as you mentioned, there's a big build up on the call side open interest. So that could act as an immediate hurdle. But I believe 45,000 is immediately there. And once that is taken out, there could be more room on the upside in the Bank Nifty. So banking is one space, Agam, which definitely looks strong to me. And one should look at going long on the Bank Nifty with a good strong support at 44,600 to about 44,500.
All right, fair enough. So that's your view as far as indices are concerned. Before I take Aditya's views on some of those individual stock futures, let me address what's going on in our markets as well. Naveen, fluorine is not exactly the most liquid counter in the futures and options space, but it's taken a knock after I believe that one of the key personnel in the management will be looking to step down, and it's actually taking a knock around nearly 13%. There is also weakness in MCX. This is, of course, on account of the news that its CDP will not go on stream just yet because of technical issues. They'll have to wait out on that one. And besides that, well, you have your usual suspects. And as Aditya has already mentioned, some amount of weakness coming through in Infi as well as TCS and some of those IT names. So that's coming in focus. But let's shift focus to another sector then. Aditya, you actually have calls on two pharma names. Can you take us through those?
Adam, that is one space I believe where we can hide actually in times of market volatility. FMCG and pharma, given IT is correcting big time, and pharma has been outperforming, Agam. If you take a look at Sun Pharma, the way the likes of Lupin, Cipla, all have been performed, I believe there is more room on the upside. And second space is your hospitals and your diagnostic center. I believe one should not ignore the diagnostic space and the hospitals. There is good money making opportunity here. So the first stock that I picked up for our viewers is Sun Pharma. It's a beautiful looking chart, and if you look at the long build up there, there's a good long build up in Sun Pharma as well. So I believe, and it's on the verge of a breakout from a consolidation phase as well. So after a good up move, stock underwent a classic pennant pattern consolidation, and now it's ready to break out from that consolidation phase. So at current levels, I would recommend go long on the stock. Look for a target of 1200 in the near term, maybe a week or so, with a stop loss at 1110 on the downside. Stock does provide you a good risk reward ratio and offers a good opportunity. The second stock is Laurus Labs. Again, one of those stocks which recently witnessed a massive correction and then underwent a sideways consolidation. Similar trends you will witness in Metropolis, in Dr. Lal Path Lab. All of these diagnostic stocks have witnessed a significant correction and then underwent a consolidation phase. So Laurus Labs looks the best to me within all of these stocks. Go long for a target of 425 with a stop loss at 384 on the downside. Stock should provide a good risk to reward again.
Well, certainly a good risk to reward is what we're looking at in Laurus Labs, and as Aditya has already mentioned about the weakness through the course of the year, and currently it's starting to see some amount of traction once again. cost today as well. It's trading higher by around 2.2%. But Aditya, you also have a view on L&T Finance Holding. What's the take here?
So Agam, again, this is one stock which witnessed a massive up move and then underwent a similar type of consolidation, like I'm talking about Sun Pharma as well. So from 140 odd levels, stock did witness a minor correction to 120, and then it's now inching higher again. And then the setup looks like it's ready for a breakout on the charts as well. If I take a look at the futures data, I believe there is a long build up there as well. The volume pattern does suggest that it's crossed its previous 5-day volumes as well. So all in all, it looks very strong on the charts, ready for a breakout from a downward sloping trend line. Go long at current levels. I have a positional target of 145 Agam here. So you need to hold on to it for at least a week or so, or maybe 2 weeks for the targets to reach there. With a stop loss at 125, this is one stock which you should definitely look at and not ignore. Add it on your portfolio as well. So these are the 3 top recommendations: Sun Pharma, Laurus Labs, and L&T Finance and Holdings. So I believe all these 3 stocks provide a good opportunity on the long side.
Well, fair enough. Well, we will be watching out for that. Of course, for now, also the indices are in the green, and I'm sure at least the bulls will be keeping the fingers crossed for at least a positive end to this week, which has been extremely volatile. Aditya Agarwal, thank you so much for joining and taking us through your views on the markets. And well, for now, we're signing out from BQ Prime, but don't go anywhere. There's lots more lined up, so stay tuned and we'll keep bringing you more.